Hello traders, in the zone here with another video. In this video I want to cover a setup that happened today. It's part of Mark Fisher's ACD method. It's called pivot first hour high/low, and basically what this is whenever the pivot range engulfs the high of the first hour and you close within the lower 15 to 20% of the initial balance of the first hour, and then you confirm a down. When you have those three things that line up, then you have confirmation of this trade setup, which generally will lead to a trend day. And so today I tweeted out on Twitter that I thought we could have a trend day, and I thought that we could go to the 1916 area down to the 1914 area, and today's low is 1915.75. So a couple of things about this. Let me point this out. Okay, this white line right here, this is the separator between the pre-market and the pit session, and so our opening range is two white lines here on this first bar, this 10-minute chart, and we pressed up on the first three bars. First 30 minutes, we pressed up into the pivot range and it held as resistance. Now the reason it held as resistance was because we closed above this pivot range yesterday. Okay, so you would expect us to open above that pivot range, and when we didn't, then you want to start looking at the pivot range as resistance and not support. Okay, and also in market profile we developed a 2-day higher relationship, okay, in the value area yesterday also. However, this morning we were opening below value. Now we opened within range, but we opened below value. So again, that is telling you that there's a rejection of that higher value area. And so in market profile terms, you would have wanted to look for a sell zone between the value area low and the point of control. Well, the value area low was the daily pivot, okay, at 1937. So I knew that this zone was going to be a pivotal zone, somewhere between 1937 and 1939. And after the first 10 minutes, we got our A points, and you can see that the A point up here lines up with the H3 resistance zone. Okay, so I knew that was going to be a zone that, even if we could have pushed above the pivot range, I would have definitely gone short of fading the A up if we'd have had any kind of push up towards that A up. Even though it would have been through the pivot, I think that it would have been a great A to short, because you got two indicators. You got the Camarilla H3 resistance level, and then you've got the A up level. It would have been hard for them to confirm that. Okay, so basically the pivot first hour trade in Mark Fisher's ACD method says that if the high of the day is engulfed by the pivot range, now this can work the other way around. If the low was in the pivot range, okay, you could have this in reverse. Okay, so the high is engulfed, it means it's inside the pivot range. Okay, and then you close in the lower, I would say 15 to 20% of the initial balance, the first hour. And what you'd like to see is also that you had a confirmed A down. Now this morning we didn't have the confirmed A down until after the initial balance. Okay, so it wasn't a perfect textbook setup. However, judging from the weakness in the market, I believe that this was going to fire. And like I said, I tweeted it out that we could see a possible trend day, and that we could see lows down around the 1916 and 1914 area. Okay, and so this worked out pretty well, even though the A down, the confirming of the A down came after the initial balance. It still worked out. And another thing, let me point out these moving average lines here. Okay, I've got a fast, an intermediate, and a slow moving average. Okay, the fast is the green, yellow is intermediate, and the red is the slow. Okay, we also had the fast cross over the slow. This sends you into a sell signal, okay? And then after that, the moving average lines get stacked and sloped to the downside, okay? So this is a great way of telling whether or not you're going to have a trend day, okay? And today, it's a trend day. I wouldn't call it the best of trend days. There's a lot of sideways movement here, okay? However, and also, like I said, we did not confirm the A down within the initial balance. So that was probably why we had all this sideways movement here, okay? But it did ended up being a trend day down. Now, another thing that led me to believe this is another concept that sort of blends Fisher's methodology along with some bar reading that I learned from John Crane, okay? So let me go through this and try to help you out understand the bigger picture, okay? So what I'm going to do is I'm going to bring up a daily chart, okay? And I'm going to show you a couple of things. One is Mark Fisher, in his ACD method, he uses the first day of the trading month, every month, as a zone, okay? And you can take this zone as just a standalone zone, or you can also calculate a pivot off of this zone. But you can see that this was the first day of February. We created this bar, and then we traded down, okay, for most of the month, and then now we've bounced back up. Now, I took a lot of losses during this bounce back up here, okay, because of these gaps. We kept gapping up, and I kept trying to get short early in the day, and I kept getting run over because of all these gaps. But we came back up into this zone, okay, and so I know that this zone should be resistance of some sort, okay, unless you can break to the other side. Now, what I want to show you is that we had this pivot over here, okay, at 1940. And whenever you break a pivot, of course, you have a breakout, okay? Now, how do you know whether you want to take that breakout or not, okay? Now, on a daily time frame, that's a pretty big pivot, all right? But you can take these pivots on lower time frames. And what I'm going to show you, hopefully I won't confuse you, but I'm going to try to show you why I knew today would be a trend day, okay? Now, over here you see that we have the 24-hour chart, and over here we have the pit session chart, okay? Same chart, two dailies. And I've got my moving average lines on here, okay? And we're in a sell, okay? The moving average lines have been stacked and sloped to the downside. Now, here over the last 4 or 5 days, the fast moving average line has started to point up. This would tell you to possibly get out of your shorts and go neutral, okay? And but when you get up here to the to the slow moving average, the red line up here, this is telling you that you haven't crossed over here yet, but you're also taking out a pivot. So you're either going to get one or two reactions here. You're going to blow through this pivot, and price is going to rally hard. And you're going to pull this moving average line up, and it's going to cross here, and you're going to go. But you also can fail here, okay? And that's a great place to put on a trade, all right? So I knew that this being the first day of February, I knew that this zone was going to be an important zone, and I knew this pivot was going to be an important pivot, okay? So I was watching yesterday when we broke above, and I was watching to see where we would close, because I knew we needed to close above that pivot in order to have a good signal, all right? And we didn't. Now, if you look over here on the 24-hour, we also traded above this pivot, but we couldn't close above here either. Now, there's a couple of differences between the 24-hour chart and the pit session chart. One is this breakout bar here, okay, we haven't traded below the low yet. But over here on the pit session, the breakout bar, we have traded below. That's a sell signal, okay? So let me bring up a diagram, and this is something that I learned from John Crane in his book, Unlocking Wealth, Secrets to Market Timing. Now, if you haven't read this book, I highly recommend it. If you look on my website, it's one of the top 3 books that I recommend that people read. What I'm going to show you is in this book. Now, I hope he doesn't mind me sharing. But anyway, this is going to be how you can tell the strength of a breakout. All right. Okay, here what we have is we have price pushes up, pivots here, and pulls back. Okay. And on the pullback, this would be a bear flag. All right. So when we have a bear flag, we put in a pivot low. All right. When price recovers and pushes up and breaks this pivot, okay, then this can be looked at as a buy signal. Okay, you're going to buy this breakout. Now, if you bought this breakout at entry, okay, you're going to put your stop below the pivot low here. Okay. Now, what this breakout bar does tells you a lot, okay, about the potential for the breakout. In this case, the breakout bar closed above the pivot. All right, that's a good sign. At that point, you can now move your stop up from the low here to the low of the breakout bar. Okay, and then what John Crane says is after you get 3 closing bars above this pivot point, you can then move your stop to entry. Okay, because the trend should continue in this direction, and that's a good breakout. Now, good breakouts can still happen even if the bar does not close above. But what you want to watch for is you want to watch for the next 2 bars, okay, after the breakout bar. So in this situation, you can see that price moves up, puts in a pivot, pulls back, bull flag, puts in a pivot low, takes out the pivot high, okay, breakout signal, go long. Okay, at entry, your stop would go here. Now, this bar could not close above the pivot high, so it's showing a little bit of weakness. It wasn't that convincing of a breakout. So what you want to do is you want to move your stop to the bottom of this breakout bar. Okay. Now what you want to see is within the next 2 bars, you want to see a close above that pivot. If not, then chances are it's going to fail. Okay. So this next bar doesn't close above, but then the next bar closes above. So at this point, the bar closes above, and then once you get 3 closes above, then of course you can move your stop to break even or entry. Okay. So that's the way it's supposed to work. Now, the market also has some tells, okay, that are going to tell you whether or not this is going to succeed or not. So let's take a look at that. Okay, the first failure type is you have the pivot, okay, you have the bullish flag pullback, you break out above, it closes above, everything looks great, okay. However, the next bar becomes an inside bar. That's a market tell. That's telling you, hey, look out, okay? And if you trade below that inside bar, then you want to get out of the trade because chances are you're going to reverse. And this is what happens here. You trade below the inside bar, price reverse, takes out this low, which would have been your pivot low anyway, also takes out the low of the breakout bar, and then reverses. So this would be a failure, okay? And you can use this on any pivot, okay? And I'm going to show you that in a minute, okay? The second type would be if the bar breaks above, the breakout bar breaks above the pivot, but doesn't close above. Okay, this one creates an inside bar again. It doesn't necessarily have to create an inside bar. If it can not trade above, the close above the pivot high within the next 2 bars, then you would want to get out. Well, you can see here that take out the low of the breakout bar, take out the low of the pivot, and reverses. Okay, so this is just a quick run through of this. There's a lot more to this, but I just wanted to show you now. Let's go back. Let's keep this in mind and let's go back. Okay, let's go back to the daily. All right, we have a pivot high here. Okay, and we take out that pivot high, but it can't close above, okay? And then today we trade below the low of the breakout bar. What does that tell you to do? Get out. And you can also reverse, okay? So this sells off, all right? And what you're expecting now is as this breakout above this pivot has failed, and you're expecting a pull down. Now, how far it pulls down, we don't know, but I can tell you from Mark Fisher's method on his moving average lines, okay, if you test these moving average lines and you can close a bar back below this low, below the fast moving average line, that would give you another sell signal to continue the trend going down. Okay, now let's look over here at the 24-hour chart. On the 24-hour chart, it's a little bit different. We have the pivot here at 1940. We took it out. We could not close above, okay? And now today's bar so far is an inside bar. What does that tell you? That tells you if we trade below this inside bar tomorrow, then we're going to have continuation of a rejection of this breakout of this pivot, okay, to go down. So this is something that I wanted to share with you, that I knew today that when we traded below 32, okay, that was a sell signal, all right? And that in conjunction with the pivot first hour trade, you know, with the high of the first hour being engulfed with pivot range, that we were likely to see a trend day today, all right? And then now today over here, this is setting up with the inside bar, okay? And so now if we trade below, now this isn't finished, okay? So we're still, it's only 4:30 right now Eastern time. So this bar has not completed, but it looks like it's going to be an inside bar. So whatever the low is, if we trade below that low, then I would expect us to get rejected and pushed down, okay? So also let me go back. I want to show you the same thing on a different time scale, okay? So we knew this morning that we had our sell signal here, okay, with our pivot range being resistance and getting rejected and moving down. But I want you to look over here. See this pivot high here, okay? We took out that pivot high with this bar right here, okay? Now, let me see if that bar high was 36.75, and this bar closed at 37. So it did close above, okay? However, the very next bar closes below, trades below and closes below the breakout bar. So that tells you to get out, okay? So in this case, okay, if you're expecting this trend to continue to go higher and it breaks out and you want to see it continue to go higher, the breakout of this pivot fails. It breaks out here, trades below the low of the breakout bar, okay? So if you took this breakout trade here, your stop on entry would be here, okay, below the low of this pivot, all right? But now, because it broke below the breakout bar, you get out here, get out early, and you could actually reverse, okay? So if you would have done that, okay, you actually could have gotten short at the low of this bar. This bar was 35.25, so you could have gotten short at 35 here at around 9 a.m. And of course your stop would be a break above the high here, and it would have sold off. So you can see that you can use this breakout bar information to judge whether a breakout is going to succeed or if it's going to fail, okay? And you can use it right here in this 10-minute time frame. You can use it in a 5-minute time frame, whatever time frame you're looking at. When you take out a pivot high, you want to see continuation, and if you don't see the continuation, then you know it's going to be a failed breakout, and your tell, the market tell, is the breakout bar, okay? So I wanted to share that with you guys. Now today I only took out 5 points this morning of profit, and I called it a day, and I called it a day early because I'm trying to rebuild my account, okay? Now I could have tried to swung for the fences today and try to hit a home run, but being that the last 2 weeks have been losing weeks, and they've been big losing weeks, I'm just trying to repair my account, trying to hit some nice little singles and build my confidence back and get back into the game here. So I could have held today. I got out right at the A down, and I knew that we had the chance of going lower, you know, another 10 points. But I knew that I wanted to lock in a profitable day, and I didn't want to sit through a lot of pullback. I actually, when I got out, I actually was saying, I was thinking that we would push back up here to this intermediate moving average line here. And this area right here is where I thought that we could push up here and give another opportunity to get short in here. And so I wanted to take my profits here and possibly put on another trade here, but they never gave it to me, and there was a lot of sideways action here, and I just decided not to put on another trade, even though I knew that chances are we're going to be coming right down here. I'm happy about today. You know, I put on a good trade, and yeah, it wasn't a home run, but you know, it's a nice little single. And tomorrow's another day, and I'll have another opportunity tomorrow. If you have any questions, shoot me an email, and I'll be happy to clarify anything that I might have confused you with. That's going to do it. This video has gone on way too long, and hope you guys have a great evening, and see you later.